on Bloomberg Quint.
Hello and welcome. You're watching Countdown right here on Bloomberg Quint Live. The last day of this trading week and we are down yet another 0.5% on the indices. We've broken down below the 10,700 mark on the Nifty and it's going to be a negative close for this week. We'll run you through the internals of the markets in just a few moments, but let's run you through the headlines for the time being. Markets continue to witness selling pressure. The Nifty trades near the 10,650 mark. Broader markets continue to see sharp correction. Dr. Reddy's is the top loser on the Nifty, registering its biggest intraday fall since 2001 after the US FDA's observations for its Bachpali unit. Page Industries is another stock under pressure after Kotak Securities raised questions over its 20% revenue growth in the third quarter. And India revokes Pakistan's most favored nation status and urges other countries to isolate the country after the Pulwama attack. Good afternoon, Neeraj.
Yeah, about time that we did that, and I'm glad we've done that too, Devina. But yeah, good afternoon to you as well. Good afternoon to viewers. It was looking bad midway through trade. For now, we're just about 0.5% lower, so it's not probably all that bad for the equity markets today. The banks, though, have corrected more than what the other indices have, with about 0.75% in the red for the Nifty Bank, so 206 point down. And the market breadth should come up on your screen as well. Just to show you what the broader end of the spectrum has done today. It's been just like what last few days have been. So we were hoping that yesterday and day before yesterday would mark a bit of a turnaround in the breadth. Somehow that's not to be the case. So another day of abysmal market breadth. Not as bad as maybe the previous few days that we've seen, but certainly more than 2:1 in favor of the declines. Bring up the heat map. Devina will speak a lot about what's happening at the broader end of the spectrum. But just pull up the heat map and show you what's not doing well. Pharma has been taken to the cleaners. Metals have been taken to the cleaners. The top 6 names are all pharma and metal names. So Dr. Reddy's, Sun Pharma are from the pharma pack, then Tata Steel, Vedanta, JSW, Hindalco from the metal pack, and Dr. Reddy's and Sun Pharma from the pharma pack. Both of them have corrected. Hero Motocorp continues to grind lower. The stocks like Maruti and M&M2 have corrected. So not too many gainers in trade noteworthy. Bharti Infra, a bit of a bounce, and some of the PSUs after the Bharat 22 ETF is out, done with the subscription, are up and about in the session today. The likes of Power Grid, NTPC, BPCL, GAIL, ONGC, and their whole clutch of names are doing okay. Cipla, the odd one out within the pharma pack in the session today. But pain at the broad end of the spectrum for sure, Devina.
Most definitely, Neeraj, and we'll get a sense of that by the end of trade today in terms of the kind of cuts we've seen this entire week, not just on the index, but on the mid caps and the small cap space as well. The MRR should come up to tell you what kind of movers we have within the broader market space right now. So we'll start off first with the mid cap index and the bigger gainers in the form of Dilip Buildcon, which is doing okay for itself, about 9% higher. Adani Power is up about 5.5%. Surprised that Edelweiss, you've got the 5% gain. Actually, yesterday's session saw a little bit of a pullback too. Today, carrying forward those gains of 5%. Tata Power is up about 2.9%. Dish TV is up about 2.5% as well. Amongst the bigger losers, you've got Page Industries, 7% lower. And we spoke about the concerns that were raised in the Kotak Security note regarding its revenue jump up and, the accounting changes that led to that jump up in revenue, and adjusted for that, you'll probably see a much lower number. Indian Bank is down about 6.5% too. Glenmark Pharma and Canara Bank, United Breweries, all looking weak in trade today. From the small cap index, we've got the likes of Shrey Infra, which is down 7%, Camfin Homes, Aegis Logistics, CG Power, and that one's down about 4.5% as well in today's session. Gainers, Infibeam does okay, 8% higher. Shankara Building Products, again, last few days have not been all that bad. India Bulls Real Estate, 4.5% higher. And Jet Airways, post numbers and post the debt recast plan, is also holding steady in the session. But let's take a look at what's been happening in the futures and options space. Agam Vakil joins in for that. Agam.
Right. Well, there's no doubt about the fact that we're certainly looking at a little more weakness at this point in time, given the Nifty is trending downwards. And we're also seeing some, weakness in the Nifty banking indices as well. But when you consider the kind of movements that we've seen, while there is unwinding in the index, there is also a little more increase in OI when it comes to the Nifty banking futures. But what is more important is a 6% increase in India volatility index. We finally have started seeing a little bit of an inch up. This is, do remember, the 6th straight day of losses, and should the Nifty end in the red, and which seems like a likely scenario, this is the first time since March of 2018 that Nifty will end with 6 straight days of losses. At this point in time, we are seeing a little more writing around the 10,900 call, and understandably so, considering we're seeing more weakness coming along as far as the Nifty is concerned. But moving on to your stocks, I want to talk about Page Industries. Of course, 19% increase there. Of course, a lot of weakness on account of repercussions with respect to change in accounting standards. But moving on to the other stocks as well, we have Glenmark Pharma, which is also reeling under pressure, also down 7%, increase in 15% in OI. And from there, we move on to Indian Bank, that is also down. But this is where we're seeing unwinding. So longs are unwinding, considering a 2% decline in OI. And one stock which is also seeing even more severe unwinding was Mithun Finance, where the stock is down around 2.5%. So no gainers on my list, and a lot of weakness, a lot of unwinding, as well as fresh shorts building into the system.
Okay, Agam, thanks for putting that into perspective. Now, before we make full headway into our trade, it's also important to look at what's happening globally. So while we are all waiting for news from the trade negotiations, crude is the other monitorable. After touching new lows in 2018 in December, both Brent and WTI have staged a rebound. Brent crude is up nearly 30% from the lows it made on December 24th. Analysts believe that the optimism over the trade deal may add more legs to the rally. How much more upside does crude have, or is the state set for another correction? Let's ask Shri Parvai Karasu, the director of Asian Oil at FGE, joins us right now on the phone line. Shri, good having you. Thanks so much for joining in. Actually, before we get to that long conversation about the trade negotiations and what that does, the news that have come out in today's session is that the Trump administration is considering blocking foreign entities from dealing with Venezuela as state-owned companies, as well as the next step to choke off Maduro. Now, how significant is the Venezuelan situation to the oil movement? Or you reckon that because it was anyways not producing too much, no matter what happens to Venezuela, it will not have a larger bearing on what crude does?
Thanks for having me, Neeraj. Just to give a little background, we did have oil prices move in that $60, $62 range in recent weeks. But if you look at the recent spike, or the $3-4 uptick in the recent days, it's pretty much coming from the Venezuelan crisis. So clearly, it does have an impact on the oil market. We have not really seen production gone down yet, but we do think close to 400 KBD of Venezuelan output is clearly at risk. And this will have an impact on prices on the upside. There's no doubt about it.
Okay, so how high is the probability out there, though? Is it a given that we will move northwards from where we are right now?
Clearly, we have this built in our base case scenario now. If you look at the supply side, we have taken close to 350, 400 KBD of Venezuelan production from our balances. And this means clearly there is an upside for crude prices from here, and that will be seen in the coming weeks.
Okay. Now, if indeed China and the US manage to come to some bit of an agreement which only bolsters global trade, does that also add to, either via sentiment or otherwise, some uptick in what is looking like a market on the upside? Crude currently, I think, around that $65 per barrel mark for WTI is certainly up and about.
Yeah, very much. The signs of progress in the US-China trade talks is already helping to boost crude prices. And if the talks go in the right direction, we can clearly see a large uptick in crude prices. I mean, when I say that, it's all sentiment driven, and it can be an easy $3-4 upside for crude prices. Now, today's world, right? I mean, it's a lot sentiment and geopolitical risk driven. Yes, fundamentals are playing a role, but to me, this is one of the times when we have seen such uncertainties or, volatilities being more widespread in deciding the oil price path. And clearly, Venezuela, US-China trade talks are the key things to watch for crude prices in the coming weeks, coming months. And clearly, all points to an uptick in prices.
How much upside, Sri, do you reckon in the near term?
I mean, we think, when we look at our balances, we have global oil balances going into a deficit by mid this year, which means oil could even touch, when I say oil, like Brent prices can go up by another $5 and touch $70. Now the question is, if it reaches that stage, how will Trump react to it? We all know, Trump doesn't like very high oil prices, and probably $70 is the range which he is comfortable at, and that can have reactions on the U.S. waivers on Iran and things like that. That's really a whole set of new stories which will begin again. But at this point, just looking at positive progress in U.S.-China trade talks and Venezuelan production cut, we think another $5 increase is possible. This is not going to happen overnight, but yes, in say 2 to 3 months.
Okay, Sri, we'll leave it at that. Thank you so much for taking the time out and being with us today and giving us your thoughts.
Yeah, thank you.
Well, certainly some more upsides seen in crude as well because of two key factors, Venezuela and the trade talks.
Let's see how the oil marketing companies react to the same.
True.
But let's keep it with some numbers then. And Kaveri Seeds has posted a weak set of earnings for the December quarter. Delay in rains and lower acreage were the two major reasons behind the fall in revenue. Cotton and maize segments faced the trouble, but hybrid rice seeds saw good sales this Rabi season. To help us understand the key factors that were at play this quarter, joining us now on the phone line is the Executive Director, Mr. Mithun Chand. Mr. Chand, thanks very much for taking out the time. Highlight for us the quarter gone by. Profits were down 33.3%. Revenues also saw a slip. Mr. Chand, can you hear me?
Hello?
Yeah, hi, Mr. Chand, can you hear me?
Yeah, it's better.
Yeah, I was asking you about the key highlights of this quarter and what caused the dent in the profits and the revenue.
Basically, it's a very lean quarter for us. We do a limited sales in the third quarter as Rabi is limited on just a few crops, especially maize. And this year, maize acreages have been impacted by fall armyworm. That has impacted our sales by more than 20%. But we have made some sales in rice, which we have done well, so we have got up some sales. But if you see in terms of the percentages, it looks like 5%, but it's in terms of revenue, it's hardly 3 crores.
All right. Do you expect? All right. So,
yeah, it's a very lean quarter. That's the reason the percentage looks high.
Okay. Talk about the individual segments then, cotton seeds, hybrid rice seeds, maize seeds, and the volumes thereabouts, and a futuristic outlook on whether you see an uptick in volumes in each of these segments, or there are some risks attached here.
This year the cotton acreages have come down compared to previous years on the threat of the pink bollworm and in some areas like delayed rains. These both have impacted the cotton sales. But if you see right now, if you see the sentiment as a crop, cotton looks very good as the commodity prices are high. Even though the yields are a bit lower compared to previous years as pink bollworm has affected, but by seeing the commodity prices and the farmers have realized most of the cotton, as of now, the sentiment for cotton is very good for next year.
Could you give us an overall snapshot as to what you do by the end of the year? And for FY20, if you could give us a ballpark number in terms of the top line as well as what you could do on the bottom line?
If you see, even the fourth quarter in our business is a very lean quarter. We will not add much sales and profitability to the top line. But going forward for the next year, we can grow in between 15 to 20% as a whole. In cotton, it will be more than 10% sales, and in non-cotton segment, it will be more than 20% sales. But we see a slight improvement in the margins as the non-cotton contribution will be more than the cotton contribution. So we see a slight increase, 1 or 2 percentages more in terms of the margins.
So that would be around a figure of closer to 13%?
Sorry?
What would that margin number be around? Approximate, would it be at the same run rate?
The growth will be 2 or 3% more than the top line growth. I mean, it's a part of bottom line growth will be 2 or 3% more than the bottom line, so top line growth.
And margins, sir?
Margins will go up. That's what I was saying.
Okay.
We'll grow at 15 to 20% at the top line, and the margins will grow at slightly above the top line.
Okay, so you're saying that even Q4 is going to be a lean quarter for you?
Yes, yes. Basically, first quarter is the main quarter for us, and I think it will remain same as in India. Most of the cotton crops, I mean, more than 90% of the cotton crops come in the Kharif area, which contributes more than 55% to our revenue. So the first quarter dominates the other 3 quarters.
So 40, almost close to a month and a half of the last quarter is already over. So you would rather have a better idea as to what you would do in terms of the top line. Would you be closer to this mark that you are at, around the same figure of about 67 to 70 odd crores?
Yeah, that's it. Last quarter we hardly had around 40 to 50 crores of revenue. It will be in line with the last quarter.
All right.
Not much significant sales will happen in the fourth quarter.
All right, so pretty flat fourth quarter as well, so not much expected on that count. Just one last question before we let you go, Mr. Chand. Some reports suggesting that the company has lost licenses in Andhra Pradesh for illegal sowing of HT cotton. Could you verify, deny that?
Yeah, the government has issued a show cause notice in 2017 regarding some incidents of herbicide tolerance presence in our habit. But that we have replied to the show cause notice, and we are in touch with the authorities. We have submitted all the required documents, and I don't think that will be an issue. It will be resolved.
So no impact at all of this?
As of now, we don't see any impact.
Well then, Mr. Chand, thanks very much for joining and appreciate you taking out the time. That's the management of Kaveri Seeds talking about Q3, which was a lean quarter, but there is no difference expected for Q4. That too is expected to be a lean quarter for them. So he actually said something to the tune of 50 to 55 odd crores in terms of the top line. So it's lesser than this quarter.
It's looked weak. This Q2 was weak, and next quarter doesn't look too inspiring either. Let's wait and watch. Well, it's not been too inspiring a day for pharma companies. So let's talk about all the key stocks in news and the news makers in the session today. Start off with the pharma names, and Dr. Reddy's in particular fell 30% intraday. But that notwithstanding has been under pressure. It made up some of the lost ground, but under pressure after the latest Form 483 issued by the US FDA became public. The letter came after the pharma watchdog conducted inspection of one of DRL's biggest plants in Bachupalli, Telangana. Darshan Mehta joins us now for more. Darshan, how many of the 11 observations made in the letter are serious, and what are the implications going ahead?
Yeah, so they don't look serious as of now. If you look at it, there's no data integrity issue, which means that there could be no more trouble. But the point is, 11 is still a large observation, and one of the key reasons is that 4 of them are repeat of the observation. So what happened in 2015? It was inspected, then in 2017 again, and where they got 11 observation, and then again in this year it got inspected, wherein again they got 11 observation. Out of between the two, 3 observations were the ones that were repeated in 2017, had the same observations now. So that means the remediation that Dr. Reddy took was not sufficient, because what the US FDA found the issues there, again they found it. That means whatever they told Dr. Reddy to correct that in. One of the observations was there in 2015, again then in 2017, and again now in this. So that means that is a serious issue. Whenever repeat observations come in, even if they are not serious, the FDA considers it, because they've told you rectify this, and Dr. Reddy's has not rectified it. So that's seems to be the concern. Now, these repeat observation either lead to some bit of quality control, lab testing, or probably some bit of training, written procedures. So it's something that Dr. Reddy's can get about it. But still, this will take time. Why is this plant important? Is the fact that 45% of their revenues comes in from this plant. For the US, revenues comes in for this plant. Almost 15-20% of their future filings are from this plant. So if the plant is not clear, they will not get, these products will not be cleared. Brokerage is also saying that this will take time. The re-inspection, probably they will have to go in and do all this again. FDA again will come and re-inspect. So even as a 483, I can tell you, see, the plant is not shut down. They will continue to supply. So revenue impact is not there as now, but the future impact is there, because the future products that they want to sell, they will not get approval. So the base becomes stagnant for Dr. Reddy. That is the problem that they had. Edelweiss says that they spoke to the management, and the management believes that it's addressable, and they don't see this shifting to a warning letter or an import alert. But nevertheless, Dr. Reddy's has had the bad brush with the FDA, given that 3 of their plants had warning letter. 1 got cleared, but there is Srikakulam is there, Duvada is there. Both of them are still under warning letter. They haven't been cleared. And 1 more coming in, and if this gets converted or goes to a warning letter import alert, that will be trouble for Dr. Reddy's.
All right, Darshan, thanks very much.
I was just wondering, sorry, just follow up though. It's not just Dr. Reddy's, right? Today there's a cloud under a lot of other names for reasons thereof. Glenmark, case in point, Divi is a case in point.
So Glenmark, the number was bad. The conference call, the management gave a negative commentary as far as US outlook is concerned. See, my thing is, whatever I have read on pharma, Glenmark never gets a higher multiple, given the fact that the debt concerns always remain. The balance sheet is not as strong as the others are there, and the pipeline is also not strong. And the management commentary was also not the strongest. The numbers were okay. There was nothing exceptional that came out. Revenues were in line. The EBITDA was a miss. The profit was a miss. So numbers anyway was weak. Balance sheet issues still remain, and the management commentary was weak. On DVs, the management has confirmed that there is an IT raid that has happened, and that is why the counter fell in. But it's corrected most of the losses. It was down 9%. It's up down just 2%. I think it's there, but I don't think there's any major. IT stock falling 9-10% on an IT raid is something that you just need to brush aside. So it was expected, and it's recovered.
Probably, I think the initial impact on Dr. Reddy's of 30% or something that.
See, for me, it looked like a fat finger trade, and that is why it rebounded also very fast. Someone must have.
It's down just 5%.
Yeah, so it's recovered, but a 5%, 5 to 7% downtick was something that you can expect when these things come in, not a 25%, 30%. And that's why you saw just look at the reaction. How
it was immediate.
Yeah.
All right, got that. Darshan, thanks very much for that. That is, a quick analysis of what went wrong with Dr. Reddy's today and the Form 483 observations that were made. The stock reacted negatively by 30%, but immediately recovered all that lost ground, and now finally down just about 5.5% odd. Moving on then, one more stock, Ashok Leyland, is preparing for some tough days. The truck and bus maker, which saw sales slow down in the third quarter, doesn't expect the scenario to change in a jiffy. Yatin Mota, who's logged on to the Analyst con call, joins in now with the details. Yatin, what were the key takeaways?
Well, if you look at Ashok Leyland, the numbers were healthy in terms of the market expectations. However, because of mergers with subsidiary, there was some kind of impact on margins, and hence they are not probably comparable with the estimates which were provided by the analyst community. Yesterday, the stock went up as high as 10% intraday. Today, the stock has reversed all the gains. In fact, the yesterday's lows have been broken today, and the key reason here is probably from here on. Everybody is sensing some kind of a slowdown. In fact, various questions were asked to the management with regards to the demand. The management did believe that a 10 to 15% growth, could be seen for FY19 as a whole. More importantly, for the coming financial year FY20, they say some bit of slowdown, given the fact that there are 2 reasons. One is the probability of the BS6 confusion and in general slowdown. And number two is the higher base last year, because of which the growth rates would not be as high as what they delivered in the first half of FY19. The management did believe that it is not necessary that they will be maintaining profitability for market share or market share for profitability. As a prudent management, they will balance out the margins as well as the market conditions with respect to maintaining their market share. Also, as far as the export markets are concerned, they did say that the Sri Lankan volumes remain weak because of the political uncertainty. Q1 FY20, as I mentioned earlier, will be muted on lower demand and higher base. And as far as BS6 is concerned, Ashok Leyland was pretty confident that they will be looking at BS6, and they are well prepared for that transition. And more importantly, ahead of BS6, the management does expect some bit of pre-buying to happen in the heavy commercial vehicles.
All right, Yatin, just stay on with us. That's a quick takeaway from the analyst con call of Ashok Leyland and what they had to say. But the other stock is Page Industries that came under pressure today after Kotak Securities put out a report which said that an accounting adjustment made after switching to a new accounting standard has led to the uptick in revenues and their overall growth numbers looking as inflated as it is. Yatin is here. He's got more details and a breakdown of that. Yatin.
Well, Devina, if you look at Page's reported numbers, the revenues are up 19% and profits were up 23%. But Kotak did, mention this fact in the report that the devil is in the detail, and probably one needs to look at the accounting policy changes that the company has done. Due to the adoption of Indian accounting standard, which is Ind AS 115 accounting norm, that has led to some additional revenue accretion during the third quarter. That is to the tune of 33 crores. And if you also look at the profit before tax, because of this 33 crore addition to the top line, 12.5 crore profit before tax is impacted on the positive side. So if you look at the normalized earnings without the Ind AS 115 into applicability, Kotak believes that the adjusted volume growth stood at only 8% versus a 12% volume growth as reported by the management. And not only that, they maintain a sell on Page Industries with a target price of 22,300. They've cut the earnings estimate by a couple of percentage points for FY20 as well. So clearly this time, because of the accounting changes arising because of Ind AS, we had seen some additional revenue accretion to the top line of Page Industries.
Yatin, so this is the stock would have fallen off today because the growth numbers, which otherwise were logging in an average of anywhere between 17 to 20% on a quarterly run rate, except for the quarter gone by, have not again. So second quarter in a row, the growth numbers have not matched the historical trends, right?
So I was just having a look with the historical revenue growth rates, Neeraj, and if you look at FY17 growth rate, that was about 20% plus. FY18 it was 20% plus. If you look at the first two quarters of FY19, the revenue growth stood at 17% and 10.5% respectively. Of course, this was a period when the stock of Page Industries corrected sharply, so it has come off from the levels of 30,000 plus to levels of close to 20,000, 22,000 in this period, because the growth rate slowed down from the historic highs. More importantly, this quarter they reported a revenue growth of 19%, and if you look at the adjustments which were done, which is pertaining to the 33 crore additional revenue, if you adjust for that, Kotak believes that the third quarter FY19 revenue growth was only 14%. So, in the first three quarters of FY19, we have seen that Page Industry has done terribly, in terms of the historical revenue growth rates, which the markets was, basically liking. People are compounding the revenue growth rates at 20-25%, but probably there is some mean reversion happening. There is some slowdown happening. The base effect is coming, and probably, if you look at the first 3 months of this financial year, the growth rate is probably sub 15%.
All right, Yatin, thanks very much for that. So, the concept and most analysts, when they say you've got to go after quality, and quality at what price? Yeah. Everybody went after Page at an exorbitant price and inflated the valuations to a great extent. but now that quality itself is under question.
And the quality of growth, certainly, the last couple of quarters has come off. The question mark only is, will it last or will it come off? And I think that is the big question that most analysts would be grappling with.
And will you pay that much now that there is a question mark on the quality?
Or do they revert back to normal growth levels and then those valuation multiples come up back again? Actually, good guy to ask that would be Siddhartha Khemka. While he joins us as on a lot of issues, because Motilal Oswal tracks Page so closely, we pertinent to get Siddharth's view here. Siddharth, good having you. We'll get to the markets in a bit, but just this word on Page, the last couple of quarters, I mean, this whole story of how, based on the number of people in India, each person who is an addressable market buys only 2 garments of jockey through the year, and therefore the growth numbers can be astronomical going ahead. If that was indeed the case, then the numbers would not look the way they have in the last couple of quarters. Is this a temporary aberration? And will people buy into it, or do you believe that there is a valuation multiple correction in order for Page?
Yeah, good afternoon, Neeraj. So it's a very important discussion and a fair discussion on Page. So while we could make the blue sky scenario of how the penetration of the undergarments in India could be and what's the population and stuff like that, if you see the historical growth rate has been pretty steady at about 18-20%. And that is what I believe could happen in the future as well. So FY19 has been a year of exception where the growth rate has dipped. There were issues and concerns. So the question is whether the company can go back to the 18-20% plus top line growth, which we believe it could, given the brand, given the focus of the management in expanding its product horizon from the earlier only focused on menswear to now women, and the recent entry into the kids wear as well. The important question then comes to is valuation. So the market was giving a valuation of a steady compounder of a 25-30% growth, which now seems to have come down and stabilized at around 20-25%. So our expectation is about 22% earnings growth for the next, so over say 20 and 21, that kind of growth that we are looking at. However, the valuation now needs to adjust to the new growth that the company could see. So from the 50 times forward earnings which is there currently, we don't see much upside given that the growth rates are now stabilizing, or the new growth rates that the company is adjusting to. So hence a neutral rating for us currently on Page. However, if you see the overall theme around Page, it is one of the best consumer stories that India has. It's a growth of 18-20%, which not many companies in the larger cap space can boast of for a consistent growth over the next few period. So that's something that keeps the story revolving around Page. Valuation is something that definitely is not in favor currently.
Okay. That is on Page Industries, valuations not in favor. Stock though has corrected almost 40% since its highs in August 2018. And today is yet another day where you're losing closer to 2,000 odd rupees on the counter. Page Industries at 22,130. Let's bring in our technical experts right now. Ruchit Jain is joining us. He's from Angel Broking. Along with him, Shubham Agarwal is also here with us. Gentlemen, good afternoon to the both of you. We'll start off first with the index. Intraday, you did see it crack down closer to about those 10,650 levels. We're back above 10,700. But what would the trade look like? Because this entire week has been characterized by weakness and lack of any sort of strength within the index. Ruchit, let's start off with you on the Nifty.
Yeah, hi, very good afternoon, everyone. Certainly, last 6 trading sessions, we have seen that after index again came below 11,000 mark. We have continuously seen a sell-off in last 6 days. Now, if I look at some of the momentum readings on the lower time frame chart, then the momentum readings are trading in oversold zone, and also 10,700 on the closing basis is a good is a support level for the Nifty index. If you look at Bank Nifty, today's low, it's around its 200-day moving average, while the Nifty Midcap Index is also trading around its weekly 200 SMA support. So I think when the momentum readings are oversold and the markets are trading near the support, so there is a probability of a pullback move which could be seen from current levels. but it would be too early to take a buy trade for this pullback move, since last 6 days we have not seen the previous day's high on Nifty getting breached. So 10,800 is the near-term resistance that we are watching for. If the Nifty manages to cross above 10,800 during early next week, then only we would take a buy call. But at current levels, we are advising our clients to at least cover the short positions, if any, in the system.
Okay, got that. Shubham Agarwal, your call on the Nifty and the Bank Nifty if you have any.
Hi, good afternoon. So I'll start with the Nifty first. I feel that the support of 10,700 still holds, because we can see that clearly the market has seen a decent pullback in the second half of the session today. And if you look at the options data for the next weekly expiry, I think 10,700 is a level that will get respected, and we don't expect the Nifty to slide significantly lower than that, even though we can have some whipsaws coming around that level. So I think this pullback should continue, and we might see a level of 10,850 or higher on Nifty. But because we have already seen a move in the second half, I think if any pullback happens to the level of 10,680 or 10,700 around this band, then I think it will be a good opportunity to go and accumulate Nifty for an overall target of 10,850 to 900. And a stop can be placed at 10,575, which is now a very critical level for the Nifty. So overall view on Nifty remains positive. We have already seen a correction, and now there should be a mean reversion happening. But the right level to enter will be around 10,680. Talking about Bank Nifty, I don't see a very tradable pattern there, because the overall market is seeing a pullback, but Bank Nifty is still far away from its support, which lies around 26,600. So I would wait for further correction on Bank Nifty to go and build any position there. But I think Nifty, if any pullback happens, will be better placed than Bank Nifty, and a long position can be created there.
What would the stock ideas be for the afternoon, Shubham?
So two stock ideas, one long and one on the short side, because overall net, if you see, the market has not been actually moving anywhere. So the first short call is on Tata Steel. So if you look at the overall metal index, that's clearly showing signs of underperformance, and we have seen a lot of short build-ups happening on the derivative data. Now coming to Tata Steel, 500 used to be a very good support for the stock, and now that is after the breakdown, that is now acting as a step resistance, and we have seen recently that the level of 500 was retested, and since then the stock has been collapsing. So I think this downside should accelerate, but a safe strategy with using options is what we are recommending to deploy. A barefoot spread can be deployed, in which the trade will be to buy a 470 put option and sell a 450 put option. The net spread is around 6.8. We expect a target of 15 rupees for the spread, and a stop loss has to be maintained at 2 rupees. The second buy call is on PVR. PVR was a very good performer some time back, and we saw that after touching the all-time high, it entered into a consolidation phase, and now we feel that that consolidation is mature enough for another round of a breakout. So a bull call spread can be initiated on PVR, where a 1500 call can be bought and a 1600 call can be sold to reduce the cost. The overall spread is at 26.5. The target for the spread will be 50 rupees, and the stop loss can be maintained at 12.
Okay. Ruchit, what about you? Your ideas?
So there is one buy and one sell recommendation based on the theory to buy the outperformer and sell the underperformer, expecting this outperformance and underperformance to continue. PFC is a buy as per the theory. During this entire week, we have seen a decent sell-off in the broader markets, but in spite of that sell-off in most of the names, the stock has shown a relative strength and has shown time correction rather than a price correction. Now, this entire time correction, which has been seen in the stock since last 2 weeks, is above its support of 98. So till the levels of 98 are hold, I think the stock is poised for another leg of up move towards its previous high of 108, 110. So at current levels, one can go long on PFC with stop below 98, expecting near-term target of 110. And I would short the one of the underperformer, which is Godrej Consumer. Recently the stock has been forming this low top, low bottom structure, and post announcement of its quarterly result, we have seen the selling which has been supported by increasing volumes. So I think due to the high volumes on selling, this underperformance would continue in Godrej Consumer. At current levels or on many minor pullbacks, if we get, then one can go short on Godrej Consumer with stop above 682, expecting target around 640.
Okay, so well, those are some ideas. By the way, the other pocket which has been under a bit of a cloud today is pharma and pharma and metals. So the two pockets which have been under a bit of cloud today. Siddharth, what do you do with, say, a stock like Vedanta? Very cheap on the valuation front, but the latest move from them, bringing out some corporate governance concerns as well. The metal cycle notwithstanding, is this nearing levels wherein institutional investors might be keen to buy, or would you think people would slightly shy away from Vedanta?
And Neeraj, so we have had this discussion earlier as well. In the current environment, the market is not taking lightly any issues, be it a corporate governance, be it pledge of shares, or be it any misappropriation of funds by the promoter entities. So this is a case where we have seen that it was a surprise where the market did not like the allocation of funds to a promoter-owned entity, and that has just happened, and this would be a drag in the numbers for the next 2 years. To top it all, we could be closer to the peak of the steel cycle, where the metal prices have already seen some cool off. Stock prices in the metal space are trading close to their 52-week lows, and we have seen how the global growth, economic growth, especially in countries like China, have been slower, where the metal prices, the consumption of metals have seen some slower growth. So my belief is investors, especially institutional investors, would still stay away from a name like Vedanta, given the recent the issue of the capital allocation. If at all someone were to look at a steel company, there are better names like a JSW Steel, which despite the weak numbers has a much better track record and could be a better preferred play if someone wanted to look at the steel space.
Right. Siddharth, the other one obviously is Jet Airways and the debt recast plan that they have come up with. And while the stock obviously is doing what it's doing, it's up about 2.5%. The results were also nothing much to go by, but this gives it an initial buoyancy. It gives it some legs to stand up now and go ahead with its regular operations. But do you feel that this is probably something that's not going to go away too soon, because the industry itself is getting plagued by a lot of issues?
Yeah, Devina, so while we don't have a coverage on Jet Airways, so I will not have an official view on the stock. On the overall sector, we have coverage on Indigo, where we have a neutral rating. You are right when you say that there are issues with the industry. So right from last year, when the crude oil prices went off the roof, the rupee got depreciated. Now the industry is facing with some other similar issues of high debt. Pricing is something that has been impacting, and debt on both the books are something which is impacting the larger ones. So in this space, even if the resolution were to happen, if you see the earnings, they are still making huge losses. Jet reported more than 700 crore loss, and the new management, if and whenever was to happen, if were to drive the business, it will take some time for them to drive the business into profitability. Till that time, the overall sector could remain under pressure, and from a retail perspective, one should avoid sectors with such kind of developments where you don't know what will happen next.
Brent crude back closer to about 65 odd, Siddharth. Oil marketing companies going to remain in focus. We've seen the pressure that's building up on these oil marketing companies, and it's not just because of what crude oil has been doing, but most of them, in fact almost all of them have been in the Bharat 22 ETF list, which over the last 6 days you saw the pressure building up. Today's session though, there has been a slight bit of recovery in all of those names, but looking at the kind of performance that they have posted, the expectations were that most of them would report losses, but they reported a marginal inventory gain. Singapore GRMs have been coming off. What's the outlook for these oil marketing companies, and whether or not they look good for an investment point of view?
Yeah, so if you look at the oil marketing companies, they are available at a very good valuation. They have come off from their peaks, and so has PFC. As you said, the crude oil prices are now on the boil again at $65 Brent. So that will keep some pressure in the near term in the earnings for some of these companies. Nonetheless, from a long-term perspective, I think some of the institutional investors will definitely find some value in companies like an Indian Oil Corporation, where the free cash flow generation expected over the next 2 years is pretty strong. The earnings yield is pretty good, and the valuations are pretty attractive. From a retail perspective, it may not be a sector to jump in right now because the crude oil pressures are still there. The Q4 numbers may not be that good, and one may get better entry opportunity, or at least there could be a time correction at these levels for some more time.
Okay. At the broader end of the spectrum, stocks which are moving around, Dilip Buildcon, the top gainer on the Nifty 500, up about 9.5. Reddington at about 9% higher is trading reasonably well for itself. It's not been a great performer for the last few periods, but the week to date, Reddington India has had some strong moves post the results. It's 19% higher in the last 1 week gone by. So it's a strong show today, strong show over the last 1 week. Really good going for Reddington. Siddhartha, Khemka, any thoughts here? Reddington, the numbers looked okay, but a lot of confusion about, I mean, I don't know if you cover this or not, but a lot of confusion about what the sales impact would be if Apple moves away and does its own stores, etc., etc.
Yeah, Neeraj, so we don't track Reddington, and I have not had a look at the numbers, so I will not be able to comment on this.
Understandable. Maybe I can get a chart check going on this one first before I take in my final question with Siddharth. Ruchit, can you comment on Reddington?
Yeah, Neeraj, no, the broader trend has been negative since last 1 year. There is a formation of low top, low bottom structure. So I think this up move that we have seen in last 3-4 trading session, as of now, this just seemed to be a pullback move. Although the volumes are quite high in last 3 days, but I think the stock needs to take out its resistance around 90 to 95 before we can see that the stock would change its trend. So as of now, this seems just to be a pullback move which could extend towards 90 to 95 range, but I won't advise to go long at current levels. In fact, I know those who are stuck in on long positions and this at higher levels, they can use this pullback rally to exit from their positions around 95.
Okay. That is on Reddington, 81 on the stock price right now. Siddhartha, as a house right now, what are you most sanguine about in terms of maybe a 1 to 2 year time frame that could look like an outperforming stock?
Yeah, Devina, last time the stock that I suggested was Axis Bank from a 2 year perspective. So today the stock is from the consumption space, from the retail space. As a house, we are very positive on Titan, and not just today, we have been positive from last couple of quarters. And it's played out very well. The earnings, even in the latest quarter, we saw very robust growth, top line growth of almost 35%, strong earnings growth. That's one stock in the where the management is confident of 20% plus growth for the next 5 years, and a bulk of it is coming from same store sales growth. So if you see 70% contribution of growth is coming from the same stores, and that gives a lot of confidence in the larger space. So this growth is much higher and better than the entire, say, FMCG and the retail space. So, and valuation, although at par with others, we believe that the premium valuation is justified given the strong growth. So we have a target price of about 1180, which is about 17-18% upside from current levels. But if someone were to take a view of next 3 years, 4 years, that's a stock from the consumption and retail space that one should look at.
Okay. Good talking to you, Siddharth, as always. Thank you so much for taking the time out and being with us today.
You're most welcome.
That's the view from Siddhartha Khemka of Motilal Oswal. Now, let's focus a bit on the staple space, consumption, and a bit on Nestle and some of the other stocks which are in focus today. In Nestle in particular, a surge in expenses led to the company's margins falling to 6-quarter lows. A lot of fear about what could happen to the stock today, but it's been bought into. Let's try and figure out more about what the outlook ahead could be like for this one and some of the others. Sanjay Manial, a research analyst at ICICI Direct, joins us right now on the show, tracks the space very closely and for a long time now. Sanjay, good having you. Thanks for joining in. What did you make of the numbers? Did you think that it was a big miss, or do you reckon that Nestle will get back to winning ways in a few quarters?
No, I think so from the revenue side, from the volume side, I think it was pretty much in line what we were expecting. So they have been consistently delivering on the volume front. So we have seen entire 2017-18 where the volume growth has been pretty good, and that too has happened after the 3 or 4 consecutive quarters of the volume degrowth in almost each and every segment. So I think from the volume front, the results were pretty much in line. On a lower base last year, they have seen double-digit growth. Obviously, that was not sustainable, but still, I would say that the kind of launches they're doing pretty well in that sense. As far as earnings are concerned, obviously there has been a 400 basis point almost dip in the operating margins, and that's the change has not happened because of the gross margins, because gross margins have remained intact. The larger deviation has come from the advertisement and the promotion expenditure, and I think the company is pretty aggressively doing promotions specifically in the breakfast cereal segment. So they are looking that particular segment or that particular category very aggressively. Moreover, they have launched many products, many variants in the existing categories. So I think whenever any FMCG company is looking for such a high number of launches, they have to be backed by the good advertisement and the promotion expenditure. So we have seen, in fact, such an aggressive advertisement expenditure first time in last 4-5 quarters, despite the launches were pretty high. So I think this will probably really bode well for the future growth in terms of volumes.
So so I'm guessing your base assumption is that with the volume growth coming back, these expenses as a percentage of sales would also normalize, and it would also lead to margins returning back to normalcy. Is this likely to happen immediately, or would it take a couple of quarters?
I think they probably will continue to spend aggressively, specifically in certain categories. In fact, what I understand, so the previous few quarters margins were about 20%, 23-24% kind of a range we have seen in earlier. So I would rather say that the margins have probably come back to the normal, though there is still scope for the improvement as the possibility of the premiumization is there. We have seen companies launching products across the premium as well as the mass category. So if the premiumization happens, then probably margin expansion is possible. But if you see the history of last 7-8 years, they probably have maintained 20% odd kind of margin. So from the elevated margins of 23-24%, they have come back to the 20.7% or 20-21% kind of margin.
Interesting. Okay. So you would have told your clients to go out and buy a Nestle today if they would have asked you?
So yes, so we have a buy rating on Nestle with a 12,000 target. We have maintained that target this quarter as well.
Okay. And from this consumer stroke staple space, Sanjay, is Nestle amongst the better ones to buy, or are you preferring something else? Almost all of them have valuations which are near the higher end compared to the rest of the market anyways.
So we in the entire FMCG space, we have seen two kind of trends which are playing out specifically in this quarter. So we have seen a double-digit growth from both HUL and Dabur, and that has mainly because of the mainly due to the higher rural growth specifically in this quarter, and that was also a continuation from last 2-3 quarters. So what has happened specifically in the rural space, that because of this excessive government spending before the elections, and the growth at least in the rural areas have come back, and that has resulted into the higher volume growth, double-digit volume growth in Dabur, in HUL, which are where the larger contribution of the revenues are coming from the rural areas, and that also has been basically on a higher base of the corresponding quarters. So despite higher base, they have been posting double-digit growth. So one theme is that where the rural play is really paying out, and secondly, I think as second would be the stories like Nestle, where they are aggressively launching the newer products, and specifically they have from last 2 years, I would say, from the time they have really faced the challenge after Maggie, so they have aggressively launched newer categories in the the food space, specifically breakfast cereal I can mention, and the story like that which has been playing out. So we have been selective in FMCG space, despite the valuation are pretty expensive across the board.
All right, we'll leave with that. Sanjay, thank you so very much for joining in this discussion, talking a little bit more about Nestle and the entire consumption space. I'm going to take a short break, but before that, India has revoked Pakistan's most favoured nation status after the Pulwama terror attack led to 40 soldiers losing their lives. The Cabinet Committee on Security Affairs, which met earlier today, passed a resolution asking all other nations to isolate Pakistan. Other nations like the US have already come down hard on Pakistan, asking it to crack down on terror units like the Jaish-e-Mohammed, which has taken responsibility for the attack. Home Minister Rajnath Singh, who's visiting the area, will hold an all-party meeting after he comes back from Jammu and Kashmir. The Congress has also said that it will back the government on any move that it makes to fight terror.
हमारे सुरक्षा बलों को पूर्ण स्वतंत्रता दे दी गई है। मैं देश को भरोसा देता हूं कि हमले के पीछे जो ताकतें हैं, इस हमले के पीछे जो भी गुनहगार हैं, उन्हें उनके किए की सजा अवश्य मिलेगी।
The Ministry of External Affairs will initiate all possible steps, and I'm here referring to all possible diplomatic steps which have to be taken to ensure the complete isolation from the international community of Pakistan, of which incontrovertible evidence is available of having a direct hand in this gruesome terrorist incident. The most favored nation status which had been granted to Pakistan stands withdrawn. The Ministry of Commerce will issue the necessary communications in this regard.
The aim of terrorism is to divide this country, and we are not going to be divided for 1 second. No matter how hard people try, this country and the entire opposition is going to stand together. We are going to stand with our Jawans, and we're going to stand with the government.
Indian Overseas Bank, the commitment, the recognition, the passion, the trust and excellency since 1937. Indian Overseas Bank celebrating 82nd Foundation Day. Good people to grow with.
Today we are meeting Royston Abel, Theatre Director. Royston believes you don't need words to tell stories. There is no way to describe what Royston does, because what Royston does defies definition. Can you say that about anyone else? To be so fiercely individual, yet create music and theatre so accessible, so easily understood and felt and appreciated, not just at home, but the world over. When he turned his eye homeward, he created shows that travelled the world, bringing it a glimpse of our culture. The Manganeer Seduction, the Manganeer Classroom, 100 Jammers and the Kitchen. Watch his exceptional story, Pursuits by Skoda, only on Bloomberg Quint.
anything and everything about your investments. We're just a touch away. Monday to Friday at 12:30 p.m. only on Bloomberg Quint.
Welcome back. You're with us here on Countdown. We're about 30 minutes shy of market closing in today's session, as well as wrapping up the entire week. We're still down by about 0.5% on the indices, the benchmark indices, and this time around there's no respite coming in from the banks. It's quite the opposite of what we saw in yesterday's session, where there was an equal gain to the losses that the index was seeing on the Bank Nifty. Today's session, the Bank Nifty is down about almost 1%, 26,733. Let's take a look at what's been happening across Europe and whether or not there has been any indication from there. So mixed bag, slightly positive on the CAC, but DAX is down about 0.25%. The Dow futures will come up on your screens as well. That's down about 0.33%. So no major cues as indicators from there. Volumes, let's take a quick look at how that shapes up. The turnover numbers should come up on your screens as well. 5,31,000 crores in terms of the futures and options turnover. On the NSE cash, we're already at 29,000 crores, so that you could probably see a figure of closer to 34,000 by the time we shut shop for trade today, which is on the higher side. But that's the market standing at this point. Let's find out what has made it to Sumit Sarkar's list of the Fab 4 stocks for the day. Sumit, good afternoon.
Good afternoon, Devina. First on the list on the Fab 4 is Bharat Dynamics. Now the stock has gained on the back of strong third quarter numbers. Now if you see the EBITDA margins for Bharat Dynamics in the third quarter, it expanded to 30% from 5% last year and 10% last quarter. So both on Q-on-Q front and YOY front, we have seen a strong margin expansion for Bharat Dynamics. Second on the list is Adani Power. The stock has gained nearly 7%, and this is ahead of the CERC hearing related to Mundra project that is there today. So the stock will have to keep an eye out for the stock. Third on the list is Jindal Stainless, and the stock has gained nearly 3%. Now this is the volumes, this is on the back of high volumes. Now if you see the volumes for today, it is nearly 4 times its 20-day average. That is Jindal Stainless SR. Last on the list is ONGC. Now the stock at one point of time was up nearly 6%. Now it is up close to only 2%. Now this is after now the stock has also snapped its 5-day losing streak, and it is on the back of strong third quarter numbers and a high dividend. The company announced a dividend of close to 5.25 rupees per share, which resulted into a dividend yield of close to 4%. So that's the reason why the stock has been up today.
Anything in that they said in the con call which was particularly noteworthy, Sumit?
The debt number, now that has reduced around 10,000 crore rupees. That was one noteworthy thing that the company has announced. Along with that, they also said that the capex plan for next financial year also will be close to 32,000 crore rupees. Also, the production numbers for gas and oil both have been on a higher side that the company has guided for the financial year 2020. So those have been the key highlights that has come in. Also, the company said that there won't be any discussion with the government when it comes to subsidy burden. So that is one of the positive things that is coming from the conference call of ONGC today.
Okay. Thanks a lot for that, Sumit. Well, that's the Fab 4. Now, for the chart of the day, India's love for beer seems to be waning. A survey conducted by Carlsberg shows that the per capita consumption of beer has actually declined. Agam Bakal is here with more. Agam, not enough occasions to raise a toast?
Well, it does seem like that because India's per capita consumption of beer has fell by, 2 litre in 2018 over the preceding year. According to Motilal Oswal Securities and Carlsberg, the brokerage said in a report which based on findings by the Danish beer manufacturer said at 2 litres, India's rank below Nepal in beer consumption. And BMI Research, a research subsidiary of Fitch Ratings, said obstacles to licensing, high taxes and advertising bans with the limited opportunities for multinational breweries to expand resulted in relatively lower consumption. Certain dry states and of course the preference for spirits were among the other hurdles. But the research firm said that while sounding positive about beer's long-term growth prospects in India.
Well, So I think it'll be a good question to ask the companies like Som Distilleries and a few others, Agam, who keep on talking about how India is so underpenetrated. It seems like we are underpenetrated for a reason.
Yeah, absolutely, because that certainly is a very pertinent point. In fact, I was going through another report from Citibank, which was on Pernod, and surprisingly, even the spirits penetration for international brands is not as high as India, even though the preference for some of these, still remains with spirits, which is why, alcohol like whiskey as well as vodka, the preference out there is still more, but beer, of course, has been a considerable loser at this point in time.
Very good conversation to have on a Friday afternoon.
Well, it clearly shows that people are not making most of a Friday evening for sure, at least as far as beer goes. The per capita consumption of beer, at least the reported per capita consumption.
We'll see where you are in the evening.
Lower than Nepal. That's the key thing. Lower than Nepal.
Why don't you help it out a bit?
No, I'm happy the way it is right now. But the question is, what does all of this do for some of the companies in this segment as well? United Breweries, the numbers seem to be going okay, but some of the others have a bit of a limbo, for example, and which is why it's probably showing in the stock prices of all of those too. By the way, I remember a conversation with Shekhar Ramamurthy, Devina, 2 or 3 quarters ago, wherein he said that, I don't know about what will happen to the other players, but the larger players and UB in particular will maintain the market share or increase market share. Now, if you look at the last 6 months or 9 months, the price performances of United Breweries over 6 months, now compare that to what's happened to some of the other players in the beer segment. Som Distilleries, for example, a price of 270 to currently about 130 or 121, that's lost about 46%. So the stronger hands have stayed put, but the smaller players have certainly come off quite rapidly.
And we'll see how this dynamic plays out, with Heineken grappling to get a bigger share of ED. If the ED sells out Vijay Mallya's attached shares to the company, and how the entire scenario plays out then.
Yeah, it'll be really interesting to figure that out. Let's actually talk about that with Deepak Shenoy, Capitalmind. He's joining us on the show right now. Deepak, good having you. Thanks so much for joining in. While we talk about the markets at large and what you're doing with your portfolios as well, since we're in the topic of beer consumption, just wondering, what did you make of all these numbers? And, interestingly, data suggests that beer consumption in India is lower than almost all of the Asian countries per capita, including Nepal. So what happens then to some of the companies which are in the listed space and in this bucket? I mean, do you only focus on the larger ones, or do you now take stock of some of the smaller ones as well?
So, Neeraj, I think the beer consumption per capita is probably not a great measure. Our capita is very large, so the beer affording population is a relatively smaller one. So I think those numbers may not make a lot of sense in terms of growth. We've not seen that in the last 10 years. Also, if you look at the growth of in terms of volumes, there is actually not as much in terms of per capita consumption volumes or even the overall volume growth that has come reflected in it. But having said that, this is election season, so typically in the short term you will see a lot more interest in these stocks. Although UB is trading at 50 plus PE, there is definitely going to be a push, and there is some positivity that happens during election time, but more perhaps towards the whiskey players. Having said that, I think there's also another set of competition that's coming. A lot of local breweries, local brands, and microbreweries. So these three as a trend has taken some part of the consumption away from the traditional beer brand. So there will be that also to reckon for. And I would like to be a buyer at lower prices, especially in the larger players like UB. However, some of the other players also may turn interesting at some point. Right now, I think the bet has to be on brand and players like UB, unless some of the smaller brands come and beat them in their markets, which I don't see happening in the near term. But that is the only other thing. Lastly, of course, there's competition coming in because some state governments have reduced taxes on foreign imported liquor. This is This may start to apply to beer as well. So premium beers may actually become cheaper in comparison and affordable in general. And that has happened at least in Karnataka to some extent, and is perhaps going to spread across also. So the big fear, of course, is if states like Bihar, where prohibition is rampant, start to, that concept starts to move to other states. I don't think it will happen, but if that does, that's another risk in these players. I would like to be a buyer at small, lower prices. I'm not one right now. I don't have any liquor stock or beer stock in my portfolio.
All right. So what is the approach now, Deepak? When you're looking to, I wouldn't say trade the market, but invest the market.
So, if you look at the market today, it's the top 5 or 6 stocks that have held up the Nifty. Everything else is down. There's extreme pessimism on the street. If you look at and talk to anybody, they're like, things are bad, things are going to get worse. You're seeing some of that reflect in results, but some results continue to be strong. I personally feel the best time to invest in markets is when nobody is telling you to invest in markets. So if you're looking at it from a 5 or 6 year perspective, a lot of stocks, when people tell you right now, don't buy small caps, they will fall a lot. They have fallen a lot. They're down 35% or more in many cases. Mid caps too are down 20%. This is in spite of some of them showing extremely good results. There is a fear in the auto cycle. There's a fear in the pharma set of companies. There's other than IT, I think there's fear in literally every other sector. This is, according to me, if you look long term, if you're thinking 5 years from now, literally shut it and forget it kind of investing, then this is probably a better time than it was maybe 8 or 9 months ago. And perhaps going to get even better in the next few months because of electoral challenges and all the volatility that comes in through the debt markets. So if you're in here for the short term, you should actually be short rather than long. But if you're in here for a much longer term, this is the time to start picking opportunities and buying and building the portfolio and not worrying that a stock is falling 8% or 10%. Very low liquidity times, even a stock like Dr. Reddy's would have fallen on a 70 crore rupee sell. It's one of the topmost stocks in the country. It takes only 70 crores to bring it down 20%. That shows you how shallow the market is today, and it's because of this illiquidity that you get opportunities as well.
Okay, and Deepak, stay on much more to talk about. Just looking at some stocks which are helping the index gain some ground, because we are now down just about 23 odd points, so a bit of a pullback. Reliance certainly in the fray, about 1.5% higher, and some inching up in the last few minutes of trade again for Reliance Industries. Shubham, a quick chart check here. It's amongst the better performers in the last 15 minutes. What do you do with the Reliance Industries?
Very clearly, Reliance Industry has been one of the top performers, and each time we have seen that whenever index has gained strength, contribution has actually been led by Reliance. And if you look at the stock-specific data points, there was a temporary pullback, and today's action actually clearly indicates that this pullback is now mature enough, and now we should again see an upside coming in on Reliance. So my recommendation here on Reliance would be to go ahead and buy it with a stop loss of 12.10. And I feel that if we give it another 4-5 trading sessions, we might see a level of 1300 coming on Reliance. So very good setup. The recommendation would be to go ahead and buy Reliance for a target of 1300.
Okay, that's Reliance Industries at 1243. The new top slot on the index goes to NTPC. All right, that's come off a bit actually. No, it's still NTPC, about 4% higher on the stock right now. Ruchit, would you be a buyer in NTPC at 136?
I think if one has to play for a pullback move, then we could see some up move in NTPC towards 145, 147. If I look at the weekly charts, then recently in the mid-December, the stock had formed a low of around 130 levels where the RSI was around 35. Now during this week, those 130 supports were breached. The stock formed a low of 127, 128, but RSI is at 40 levels. So this clearly indicates a positive divergence on the weekly charts on RSI. And the prices since last 2-3 months have already seen a decent correction. So I think definitely a pullback move should be seen, and the stock should again head towards 147 kind of level in next few days. So one can take a long call in NTPC at current levels, keeping stop below 129, expecting target around 146, 147.
Okay, we watch out for these as well. Deepak, Shenoy, anything that you've written on recently, which actually that, or maybe a thought on some of these CV related plays? I know I'm stuck on autos the last few days, but for all the flair that Ashok Leyland, for example, showed yesterday on the day of the results, it succumbed to some selling pressure, taking down all the ancillary plays along with it as well. And now you track that space very, very closely. What does one do now? The valuations or the optical valuations seem to be enticing enough.
Yeah, I mean, if you look at it from a what was 6 months ago versus what is now kind of space, I think CVs are attractive. Leyland is the pure play CV kind of a play, though we've got a bunch of others who are in the ancillary spaces. I personally feel that there's a lot more to come in terms of, later this year in the short-term basis. I think we'll see some buying ahead of BS6 regulations that will kick in from April 2020 onwards. Prices will go up because of it, because much of the weight differential that will have to be added will increase the cost, and also the engine differences as well. And in anticipation of higher cost, we are going to see sales of existing non-BS6 vehicles increase later this year. Right now, there's a impact of the axle load norms also, because you've got a 30% increase in axle load loading that was allowed. So you did get about a 6 or 8 months, I think about till February or March. I don't expect the CV cycle to start picking up immediately. For Leyland, I think the problem was also exports. They were facing some issues that were geographical in nature, so they might see a little bit more of a hiatus until that comes. But I feel that going forward, CV should continue to start looking good again, both from the perspective of new sales, which will probably take after March this year to start showing an uptick, and from the replacement market of OEMs, whether it is leaf springs or axles or things like that, because I think those replacement markets will continue to be in play, including tires. So I think we should look at those markets quite seriously. I don't see any good returns in the next 3 or 4 months at all. So I expect more, beating up and the downside. But I think towards the end of this year, we'll start seeing a good recovery. And BS6 may not be such a dampener as we think. We believe that demand will start again, and the cost differential will be managed more relatively easier. So over the next 5 years, I think CVs continue to be a good investment. Disclosure, I've invested in a lot of names here.
Okay. Well, let's take stock of, Jain, stay on. Let's take stock of what dealing rooms are recommending in the session today. The last 14 minutes of trade left for the week. Darshan and Yatin are here with their channel checks. Good afternoon, both of you. Darshan, let's start with you first.
Yeah, so one of the stocks that's managed to rebound in today's trade is Nestle. It's come into the green. It was almost in the green. So, but from the week start, which was seeing almost down 1.5%. Some of the funds are actively accumulating. The rationale that they give is the fact that higher spends is something that they believe will drive traction and market share for Nestle going ahead, at least as far as advertising and promotion is concerned. Reliance is another counter in which dealers indicate some of the FII funds are active today. The big move you've seen, Nifty's almost managed to come into the green, and that's on at one point of time the Nifty was down almost 100 points. That's on account of large buying that we've seen in Reliance, which has managed to move up. And the last stock is Tata Elxsi, which is trading weak, and dealers believe that the momentum is extremely weak and they expect the weakness to continue for the counter. But Yatin, what are you hearing?
Darshan, ITC, that is one stock wherein dealers are expecting some domestic fund buying to happen. Today also on the back of fund buying, the stock is up, almost 1%, but dealers do expect that Monday also we could see some Bharat 22 ETF related buying. And probably on the basis of that news, dealers recommend a buy on ITC. SREI, watch out for that stock, has been the top loser on the future and option segment today. Dealers are recommending a sell today, buy tomorrow kind of a strategy. Dealers expect further downside as far as SREI infra is concerned. And finally, UBL, that is one stock. Earnings were decent, but a lot of long winding is what markets are looking at today. 4.5% down for that one. Dealers expect a further 30-40 rupees downside. So that is one stock wherein dealers are anticipating some downside from the trading angle.
All right. Thanks a lot for that, Yalvin. That's a quick channel check on dealing rooms. Coming to you, Ruchit, and then I'll probably get in a word from Deepak as well, but get in a chart check on a Yes Bank at the current prices.
Recently, we have seen a lot of volatility in Yes Bank, but one thing that has happened in last 2 or 3 weeks is that the up move in the prices, specifically on the day when the results were announced on 24th of Jain, and even in yesterday's trading session, the up move has been supported by very high volumes. So when after this huge consolidation of about 3 to 4 months, it seems that now the downside finally seems to be very limited or is over, and at lower levels we are finding good demand zone. So I think from current levels, as per charts, 240, if that level is crossed, then we could see some good positive momentum coming in the stock. So any dip, if we get in near term towards maybe 195, 190 odd level, and around 195 to 200 range, then I think that should be used as a buying opportunity.
Okay. Deepak, Shenoy, nil on the divergence report from the RBI. That was probably one overhang that was still there on the stock. Once that's out, yesterday's session saw the stock moving up 25%. Do you think that this will form the base now, with most of the uncertainty out of the way?
Yes, I think fundamentally speaking, Yes Bank has avoid or moved away from the big problems that it said it had, which the market assumed it had, which was a large divergence, which is not the case, and also in the lack of a CEO or the lack of continuity, which is also not there anymore. So if you look at it from that perspective, the stock is relatively low in terms of valuation. It's not very expensive. Even if it were to take a substantial hit on the NPAs that we might imagine it has, even if it took another 4 or 5,000 crore hit in NPAs, this is not a very expensive stock for a large retail bank. So having said that, there's going to be a lot more volatility because they have exposure to DHFL, they have exposure to perhaps a bunch of other companies that have debt issues. I believe the bad news may continue to keep the stock lower for a while, and I think personally that now it might look like a good medium-term bet. We haven't taken the plunge ourselves. We're still waiting for a lot of news, but there is, I think, it's worth a look. And keeping a small position is not a bad idea. And to grow it as good news comes, or if bad news comes, you can get out. It's a smaller position.
All right. 8.5 minutes left to go for market closing. Let's get in some closing strategies for next week from our technical experts. Shubham, what would be your closing idea?
I would go with the buy call on Infosys, because if you look at most of the IT stocks, even though we have not seen a very big jump in today's session, but at least most of the stocks are now quoting at the support areas, and there's a good sign of a reversal happening from the current level. So I think the IT sector can actually lead the way forward. So Infosys is a buy. Around 745 is the futures price. I think 725 can be taken as a stop loss. And on the upside, I would expect a target of 780 from approximately 4 to 5 trading days perspective.
Ruchit, what about you?
I think if the market gives any bounce back or pullback move next week, then it certainly has to be led by Reliance Industries, because post the recent pullback move, the prices are trading around its support of 1220. And also on the daily chart, we are now witnessing a divergence with the RSI, which is known as hidden divergence. So I would recommend buying Reliance Industries at current levels from next week's perspective, keeping stop below 1215, expecting target around 1300.
Okay, interesting. There is on Capitalmind a bunch of articles which are very interesting. One of them also has some mention about Zee. Now, Deepak, come in on this one. A lot of murmurs about how there could be a deal in the offing in the very near future from Zee's stable. The stock presumably is moved up, one in lieu of that as well. Does it provide any kind of favorable risk reward to a retail investor currently? It's a good franchise. It's not as expensive as it used to be. Would you buy it?
So I think if you're afraid of volatility, don't buy this stock, because the reasons why it's going down or it went down had nothing to do with the fundamentals of the stock or the company itself. It was because the promoters are over leveraged. So they have borrowed money from a bunch of people, including mutual funds, put their Zee shares as collateral, and now when they weren't able to repay those loans, some of these lenders have taken the stocks and dumped them in the market. A relatively small position of 200 or 300 crores selling that much was enough to take the stock down 30%. So if debt issues do not resolve fast enough, we might see more of this. We currently presume that there's a contract, the lenders are very happy to not sell even though there are covenants breached. But this may not survive if the deal does not happen soon enough, and there's an actual default on the debt. Now the debt is going to, this is the first time we are seeing maturity on it is about March 15th or March 20th, when there will be an actual default if the Zee promoters do not pay. If there's an actual default, that means there's going to be a downgrade. A downgrade means mutual funds are going to take a hit. If they own this debt in their portfolio, if they're going to choose to take a hit, that means some of them will want to sell the stock which they own as collateral. That will cause damage in the stock price if they choose to do that. So there is a risk of that happening if this deal doesn't go through fast enough. So if you're a retail investor, I would say invest only to the extent that you understand and are comfortable with such kind of price risk. The company is sound, the financials are actually pretty good, and there are actually a lot of reasons why this would be an extremely good purchase by anyone looking for a good India entertainment franchise and also a news franchise. So I feel that's a good story longer term, but the price volatility is going to be humiliating to anybody who thinks this is this is only upside from here on. So I would not go in unless I knew that I can take 30 or 40% risk more from where I am right now.
Right. We leave it at that, Deepak. Shenoy, thank you so very much for joining in and talking about all your thoughts there. It's interesting because Zee, on the 25th of January, the day the stock actually slumped and made a low of 288, the stock was trading somewhere around 438, 439, and that's precisely where it's come back to.
Yeah, so the dips have been bought into by select people, and
the worry was that the deal that they were trying to strike post the stock collapsing the way it did would not happen at the higher valuations. But the movement of the stock price in a matter of just 2 weeks
seems to suggest otherwise.
Yeah.
Yeah. Well, let's wait and watch what happens here. Lots of murmurs, as we said, surrounding this. Let's see if anything does fructify. Just one quick question for somebody who is long Zee. Ruchit, Jain, would you advise carrying home the longs, or would you advise taking money off the table?
I would advise to carry home the longs, but certainly one needs to keep the risk checked on these long positions. The stock has already moved from lower levels of 330 in last 8 to 10 days to 440 now. So trailing stop loss would be the best method to follow for any existing long positions. Existing longs can be held now with a stop below 418, and as the stock prices move higher, keep trailing your stop losses higher.
Okay. Gentlemen, stay on. So much more to talk about, other final thoughts to talk about. But let's start wrapping up the markets because just 2.5 minutes left for the markets to shut shop. We are not ending as badly as we were trading somewhere around noon or post-noon. So ending very flat for the Nifty and the Sensex. Reliance, courtesy Reliance, I would guess, and a few other stocks. Nifty and the PSU names. Nifty Bank, though, has been languishing and has stayed low throughout the trading day today. The mid caps and the small caps, the market breadth was very adverse and it stayed low. So that end of the market was showing some fight yesterday, has just given it up completely. Lots of casualties out here too. And we'll talk about that. But first, let me talk about what's happening at the large cap end of the market in the session today. As we close, PSUs it is. BPCL, Power Grid, NTPC, GAIL, ONGC. That's the clutch of names that have done well. All of these part of the Bharat 22 ETF. Reliance Industries bouncing back. Larsen & Toubro having some gains, so good going there. And Eicher showing a bit of spunk today. But the losers, Pharma and Metals. JSW, Sun Pharma, Dr. Reddy's, Hero Motors squeezes in 3.5% losses. Tata Steel, Vedanta, Hindalco. So that's the clutch of names that have gone down. HPCL, one PSU name that's not managed to do well. So quite divergent moves between HP and BP in the session today as well. So chalk and cheese, but a fair degree of pain at the broader end of the spectrum, which is probably the bigger highlight of the session today, aside of course, what's happened to the PSUs on the Nifty, Devina.
Yeah, so while the index is not performed as badly as the intraday drop, it's actually picked up from there. Can't say the same about the mid-cap and the small-cap indices, which have both lost closer to 1% apiece, and the weekly picture will be worse off. Starting off with a few names and the performance in today's session. On the positive side, we've got a Reddington which does well, and this is, I think, the fourth or fifth straight day of gains for Reddington. It's up 9% in today's session. Infi, Beam and Dilip Bilkon too this week has had days where it's actually done really well. So in the sense more than 5% that day. Adani Power up in the session. Edelweiss recovers 2 straight days in a row, yesterday and today, and the stock's done relatively well. Indiabulls Real Estate, Coffee Day, Jet Airways, numbers were disappointing, but I guess the debt recast plan, kick-starting the move on the stock. It's up about 2% by close. REC and PFC are the other two names that have got some form of meaningful gains by the end of trade today. Amongst the bigger losers, J. Kumar Infra is down, Indian Bank, Page Industries on the back of that good security report, highlighting some accounting standard changes reflecting positively on the revenues and the growth numbers. Adjusted for that, it's not all that great for Page Industries, which is a little bit of a concern, and the stock's ending lower by about 9%. Shrey Infra, Canfin Homes and Glenmark Pharma are the other bigger losers in this session from the broader market space. This entire week, probably a day in the middle of the week that we saw outperformance of the mid caps and small caps versus the large caps, but then once again going back to norm, reverting back to mean, where we've actually seen the broader markets completely underperform the benchmark indices.
Yeah, and in today's session too, the market breadth will first come up on your screen, and you will see that underperformance in today's session too. About 2:1 in favor of the decline. So,
and this is actually worse than the last 2-3 days of trade.
Yeah.
We'd actually had days where it was pretty narrow through the part of the day, and in the end you saw the gap widening, but this has been from the start, from the center of the day, midpoint of the day, it just keeps getting worse.
Yes, the volume should come up on your screen, and let's see if that's happened on higher volumes. Cash market volume certainly higher than what the average has been the last few days.
Yeah, at around 3 o'clock it was 29,000, and it would have appeared that it would close somewhere around the 34,000 crore mark. On the futures and options side, it's picking up a bit, so 6 lakh odd crores is not a bad number to go by.
Yeah, and contributors very quickly before we get to the weekly performances. Heavyweights on the downside.
This isn't right. Yes Bank is not. This is yesterday's performance. The Yes Bank is down in today's session.
Yeah, so let's just change it. Let's get the weekly performances up on the screen, and let's see what's happened to. Yes Bank right now it's sitting on top, and all right, this is completely true. Yes Bank, Zee Entertainment, surprise, surprise, Tata Motors.
Yeah, 7.5% higher. This week for Tata Motors. Adani Ports up about 5.5%, NTPC, JSW Steel and ITC up about 1.5%. Losers, Hindalco is down 9%. You've got a Hero MotoCorp, M&M, State Bank of India, that's the kind of loss that you're seeing. And Dr. Reddy's Lab, after today's 5.5% loss, is down about 7%. But these are all the names that have been declining because of the entire PSU pocket. This entire week has been done, I think, 2.5 to 3% odd.
Yeah.
So it's a reflection of the Power 22 ETF as well.
Yeah, I think we'll probably see Nalco in the others list as well. Maybe the mid caps and the small cap list somewhere. Nalco, all right. In the next list itself, the mid cap space. Nalco are down about 18%. Natco Pharma on numbers was down. Similarly, Graphite India, the numbers are playing part. Cummins, the numbers playing part. NBCC, the numbers. Page Industries, the numbers. Glenmark, again, results. A lot of result reactions, Devina, on the losing side.
Yeah, and on the gaining side too. So Bata had a decent set of numbers, about 5% higher for the week. Dish TV, the recovery has been gradual from the lows that we saw, when the news actually broke out for Zee, I think end of January at the same time. So Dish TV too has actually picked up from those lows. Sun Pharma Advanced Research, Devan Housing Finance, that too has done okay for itself.
and Bilcon, very interesting gains out there. The small cap space, very quickly, just to highlight what's done well. Shankara bounces back very well. Ipcar, Shrey Infra, despite the crack today in the green, and Jet Airways, one of the newsmakers, marginally in the green, 2% higher.
All right, let's get in some closing comments from our technical experts. Ruchit, as we step into trade next week, what is the most crucial thing that you need to watch out for?
So, if you see this week, the entire 6 trading sessions, the markets have, the Nifty index was down, and on each of the 6 trading days, the previous day's high was not crossed. 10,700 was a rising trendline support, although it was breached intraday, but it has been held on a closing basis since we have seen a smart recovery today from intraday lows. Now 10,800 would be the crucial resistance to watch for next week. If any pullback move has to take in the markets, then the first resistance that would be faced would be 10,800. If we see a move above 10,800, then one can expect good short covering move in indices as well as many of the stocks from the broader markets. So the key thing that I would watch for next week would be the resistance level of 10,800.
Okay, Shubham, what about you?
Yes, if you look at the Nifty very clearly, since a long time now we are in a consolidation, and I expect that this consolidation is just a mean reverting band where the Nifty is trading into. Now, given that the Nifty is already quoting approximately around the lower end of the band, so the support lies around 10,600 to 10,700, there's a higher probability of a mean reversion happening on the upside, where maybe next week we might see a level of 10,850 to 900. So I think the overall weekly setup for this week was negative, but I think a pullback should be witnessed in next week. And given that some of the strong stocks like Reliance, Infosys, and some of the other IT names have started performing, I think these should be the stocks where we should be placing the bet on the buy side. So I expect a recovery. Reliance and Infosys are the two top picks which will be there for the next week.
All right, not losing hope there. Shubham Agarwal, thank you so very much for joining us. And Ruchit as well, appreciate you taking out the time this afternoon. And with that, it's a wrap on this edition of Countdown from Neeraj, myself, and the entire team. Let's put the show together. Thanks a lot for watching. We've got the market wrap coming up next.